Let me formally introduce myself. I am Vikas Bansal, and I am the head of investment at Jiraaf. And I'm presuming every one of you would be knowing about Jiraaf, and you might have heard about us. So I'll not bore you with what Jiraaf does. And even if you don't know about us, I would request you to visit our website, and you will learn what Jiraaf is all about. And today our session is about the commercial paper. So we want to learn from Shilpa what are the commercial paper, what is the market, and learn from her experience. So we will not be taking any deal specific or company specific questions. The idea is to learn about the product itself, which is commercial paper. And just to introduce Shilpa in a brief, she has 17 years of work experience and she has been associated with Edelweiss, which is a known group for a long time. And I will leave up to Shilpa to introduce herself. And just before she starts doing so, so the way we have decided this webinar is divided into two parts. So first of all, we will have an interactive session where I'll be asking a few questions from Shilpa and try to understand about the commercial paper. And once we have uh, finished our interaction, we would open the floor for Q&A, and you may type in the Q&A section, and we will take the questions one by one. And so over to you, Shilpa. Why don't you start introducing yourself?
Yeah, thanks, Vikas. As Vikas said, I've been in Edelweiss for almost, I think, more than 17 years now. Started my career as a compliance officer. I'm an MBA in finance and company secretary as well. So I actually managed as a compliance officer Edelweiss IPO way back in 2007. From there upon, from 2008 onwards, I've been taking care of treasury at different aspects, starting from fixed income to resource raising. And last 17, 18 years, commercial paper has been a biggest, for all the NBFCs per se is the biggest instrument for, money market borrowings. I'll tell you in detail what commercial paper and what money market borrowings means. But just to give you a size of this market itself is almost 3 to 4 lakh crore size market. And I used to handle Edelweiss borrowing under commercial paper market at around 9,000 crores. At a peak, we must have been around 10,000 crores of outstanding borrowings, which I used to manage. And on over a balance sheet size of 40,000 crores. So that's the size of the market and Edelweiss, role in that. And or my role in that. As far as fixed income is concerned, I've also done all the government securities market. I'm not sure how many of you would have exposure to government securities, but it's also a huge market wherein you must have heard about banks and SLRs and CRRs and RBI cutting rates and RBI increasing rates. And there's a lot of chatter these days about, RBI increasing rates due to inflation and all of that. You must have read in the papers and all. So these are all some aspects of fixed income markets, wherein all the companies, the NBFCs and banks, use government securities to manage. So that has been my forte for last, I think, 18 years, 16 years. I'm also instrumental in setting up fixed income desk at Edelweiss. We were at a point of time managing 5,000 crores of bonds in trading. So that's about me. I'll not take much of your time and maybe I'll go to the topic in hand. If Vikas permits, I can just, take the topic in hand.
Definitely. So, Shilpa, it's very rare that we come across with a person with such a wide and diverse experience, and we would surely request our listeners and audience to make use of this webinar and learn from your experience. So, let's keep it an interactive one. So, I just want to understand from the starting point, what is a commercial paper? It's not that we have heard it a lot about it. It's something new, commercial paper.
Yes, so it's actually the most simplest instrument you can think of, because in terms of debt instrument, it was introduced in India in 1990. Just a small background there. Reason was basically all the big corporates were very dependent upon bank borrowings, and then RBI introduced this commercial paper for allowing them to make a short-term borrowing. Commercial papers are basically unsecured promissory notes. I don't know if you've heard about the IOUs or hundis of earlier times.
So yeah, I have heard about it.
Yeah, it's basically more a defined version and very regulated version of those things. It's an unsecured promissory note, mostly issued for 7 days to 1 year maturity. The most, I would say, active market lies in somewhere between 2 months to 9 months maturity. So most of the time you will find commercial paper of 3 months, 6 months, or almost around these structures, depending upon the kind of investors we have. This market is pretty one-sided towards the kind of investors that invest in this market. So broadly, commercial paper is just an unsecured promissory note which has got fixed interest rate, which has got fixed maturity. The maturity could be between 7 to 364 days. And it is generally used by manufacturing companies or NBFCs for meeting short-term working capital requirement. It could be funding their stock, or it could be funding any short-term mismatches in their ALM. So that is the idea of commercial paper, which was introduced by RBI.
So 2, 3 things I'm taking out here. So it's a short-term borrowing. Can it be more than 364 days? Will it be still called a commercial paper?
No. So as per RBI regulation, so there is a difference in regulators here. Anything which is more than 1 year or in the form of bonds, which is NCDs, is actually regulated by SEBI. So there are two kinds of market, because which are in the fixed income side. One is called money market, which is your short-term instruments market, which is commercial paper and certificates of deposits, which the only difference between commercial paper and certificates of deposit is bankers are the issues of certificate of deposits. And anything more than 1 year, which is more like an NCD or a bonds that we call the non-convertible debentures or bonds is the word that is generally used, is regulated by SEBI. The processes are entirely different. The regulators are entirely different for both of them.
Okay, so just if layman term, pardon my ignorance. So
yeah,
a commercial paper is something which is less than 1 year, and bond is generally more than a year. And commercial paper is unsecured, and it is issued by the high-rated corporates for meeting their short-term capital requirement. It could be from 7 days to 365 days.
Yes,
and
perfectly. So the difference basically lies in the simplicity of instrument. Commercial paper is very simple instrument. There is no zing bangs or no frills attached. NCDs actually can be structured in a different way. There could be short-term, long-term, secured, unsecured. Both of them are tradable. For example, commercial papers have a fixed maturity. A company cannot say that, okay, I issue a 1-year commercial paper, but I will buy it back after 3 months or 2 months. So you don't have this call and put options, if you understand, that a person can buy or sell it back to the company. So commercial paper basically is a very simple instrument. NCDs are more, structured instrument when you have lots of flexibility. So that's the biggest difference.
And commercial paper, so if I have understood correctly, there will be one shot bullet repayment. If it's a 5.
Yes. So all the commercial papers have. So I'll take you through. I think I'll just maybe tell you first who can issue CPs. There is a lot of discussion when you're saying who are eligible to issue CPs. And the reason I'm going first on who can issue CPs, basically that will give you a perspective that how regulated that market and how clearly the process is defined as to who can issue under what condition, what is the quantum, what is the minimum ticket size. The RBI guidelines are so detailed that it doesn't have a room for more any structuring or any confusion for the counterparties, be it the issuer or be it the investor. So as per RBI guidelines, these are the following people who can, issue CPs. It would be companies which are, have to be rated. I'll come with the rating later. The NBFCs like Edelweiss, banks, cooperative societies who have minimum net worth of 100 crore, reason being against, having their credibility justified. And any entity which gets specifically permitted by RBI, which doesn't generally happen. It mostly the issuers are companies, NBFCs and banks. It's this the first, second, third are the major issuers of commercial papers. The names you will very frequently hear names like HDFC, Bajaj Finance, Aditya Birla. There would be Chambal Fertilizers, JSW. These are the, I would say, bigger issuers of commercial papers in the market.
Great. So these are the people who can issue the CPs, and you have already told us this market is regulated by RBI, and NCDs is a market regulated by SEBI. But could you? I think you showed a slide in between. Could you give us the more flavor of the difference between the two? Because I've this one.
So that's so basically that's what I was trying to say. NCDs have more flexibility in terms of how you want to structure them according, tailor make them from a investor point of view or the issuer point of view. So NCDs could be secured or unsecured. NCDs could be long term or short term as well. So you can have a 1-year NCD as well. You can have a 10-year NCD as well. In fact, NCDs goes as big as 30-year NCDs as well. Similarly, you can't have calls and puts. So the CPs will have a fixed maturity. NCDs can have a maturity date which is an outer limit, but in between also they may have a in between maturity dates.
Okay, great. So
that's the difference.
So what I understood in NCDs, you can make, say, if it's a 2-year NCD, you can have monthly repayment. But in CP, it's very simple. You will get it at discount, but you will get the money at maturity also. So there is no in between.
It's straightforward.
It's straightforward and it's unsecured. And what I have assured, it is regulated by RBI, and it is like a set of entities which are highly credit worthy. They can only issue it. So there is no structuring as such, and it is required by the companies or the NBFC for banks to meet their short-term capital requirement.
Yes, it's basically short-term working capital. It could be accounts payable, some stock, everything.
Okay, and but so I've understood what are CPs, how they are different from NCDs, and who can issue them. But who are the people who can invest it? Like I've not heard. I myself have invested just around a month back. But prior to that, I've never heard any place where we can buy it. Where are they available? And you have told it's a 4 lakh crore market.
Yes. It's a huge market, and it's very active market because there's always turning that is happening. When, for example, you issue a CP for 3 months, we also used to roll over every 3 months, 6 months. So if you see the volume, it's humongous. But at any point of time, you will see almost around 3.5 to 4 lakh crores of CPs that are outstanding in the market among all the NBFCs, corporates and all. The CP, as per RBI regulations, any resident individuals, you, me, all of us can invest in CPs. Any companies, partnership firms, societies, NBFCs can invest in other NBFC CPs. Banks can be investors, mutual fund, institutional investors, including NRIs. So even NRIs are allowed to, invest in CPs. There are certain conditionalities under FEMA, but these all 5-6 categories of people can invest in CPs. Because the problem which you're saying that, you don't know how to invest in CPs is because CPs mostly has been a very, very wholesale centric issuances. So for example, the companies would be issuing CPs in a tranche of at least 50 to 100 crores. So when the tranche is 50 to 100 crores, it doesn't remain a retail product.
Correct.
In fact, I must commend Jiraaf for making it a retail product. There is nothing which in RBI regulations which stops it from a retail product. But this is the way the market has been there, wherein the companies always issue in a tranches of 25 crores and plus and 50, 100 and all, which basically is not market retail. It's more of a private investment market. However, the individuals, resident do get to invest in CPs because they invest in mutual funds, and mutual funds are biggest investors in CPs.
Yeah, I thought so. Like the overnight and for keeping the liquidity, for the redemption pressure, they would keep and invest in CPs, which is like 7 days, 8 days, or maybe a longer tenor.
Yes. So mutual funds are very big investors in CPs. Not only 7 day, they invest a lot in 2 months and more than maturity of maybe 6 months CPs as well, depending upon the kind of fund that is in. So anybody who's investing in the fixed income fund, you might check your fact sheet. There will be some CPs that would be there in the fact sheet.
If I've understood correctly, CPs are issued by corporates, and the similar version corporate CDs, certificate of deposit, which are issued by banks. Is that right?
Yes.
And the another version which government issues is T-bills. If we look at the comparison, government issues T-bills, corporate issues CP, and banks issue CDs. It's the same product but different names.
Different names. All three are money market instrument, less than 1 year maturity.
So when you mean money market is regulated by RBI and it is less than one year.
Yes. So in India, the word used is money market is basically short-term liquidity needs, which is regulated by RBI. The capital market, which is the NCD market, is called capital market, debt capital market. DCM is the normal, terminology used. That is regulated by SEBI.
So that's for the first time, the differentiation between capital market and money market is something new. I've been using it very interchangeably.
So because whenever I don't know if you read in the newspapers, then RBI comes and changes the rate. There is a repo rate change. There is a CRR change. It actually first affects the money market. The flow of liquidity in the system. For example, we must be reading about RBI trying to save rupee by selling rupee or buying rupee and all of that. So this everything affects money market, and that basically gets transferred to your long-term NCD market. So the starting of any change in the rates happen actually from overnight to 1 year, and then it gets percolated to the other durations.
It's logical.
So that is why this 1 year market is very much in RBI control.
Okay. Because RBI wants to the transmission. RBI wants to do the transmission.
Exactly, because this is also one of the instrument. The transmission of rates is also the instrument for RBI to fight inflation. I think inflation, everybody of us know, and it impacts all of us.
Correct.
That's used as an instrument by RBI.
So now we have understood what is the commercial paper as a product, who regulates it, who are the issuers, who are the participants. So I think almost everyone can invest. I don't think there's no one who cannot invest. So what are there any regulations like any guardrails which RBI has prescribed for the issuance of CP?
Yes, so fairly specifically defined. So anybody who's issuing CP and has more than 1,000 crores of outstanding will have to have a minimum 2 credit rating agencies. I'll come back on what does it mean by credit rating agencies. But the minimum ticket size for any investment. So for example, if me as an individual wants to invest, has to be 5 lakhs. And it is only issued in multiples of 5 lakhs. So there'll be not a 6 lakh, 7 lakh CPs. That doesn't happen. So it's a one CP is 5 lakh and multiples thereof.
Now I know why I did not get it. I was not the right target segment. The minimum 5 lakh investment, so nobody even contacted me. They knew that I will not be investing 5 lakh.
No, the reason behind keeping all these limits is also that RBI expects that the person who is investing in CP is not a really retail customer and he understands the risk. That's a threshold. They thought that's reasonable enough for anybody to really understand the risk and invest it, because most of the time the SEBI and RBI regulations are also to protect the investors. Mutual funds obviously are very sophisticated investors. They will do their credit analysis and they will do their own research and then put in money. So that's a different thing. For
individuals,
obviously, anybody who wants to invest in a smaller amount might not be a right investor for this. But 5 lakhs is currently, I don't think it's a very high limit that RBI has kept.
Okay. And I can see in your slide there's something called issuance and payment. Intermediate have to go.
Yeah, so I'll speak about that IPA. So the process defined is very simple, and it also gives us comfort as if I want to invest in the CP, this actually the process gives me a lot of comfort. So there is a bank which is actually defined as an issue and paying agent. The way it happens is when I give my check. So for example, I'm taking a CP directly from a company per se. When I issue my check remains in an escrow with this bank.
Okay.
Right. And until the company issues me a CP, a paper, it comes to my DMAT, this check remains in the escrow. When I get my CP in my DMAT account, this payment goes to the company. So there's an intermediary who's making sure that, that the amount that I have given, against that the company has issued and given me a paper.
So there's a settlement risk which is being taken care by issuance.
Yes, so it's basically sort of a, when we speak about generally the escrow mechanism or an intermediary who's making sure that dono match ho raha hai.
Correct. So DVP, delivery versus payment.
Yeah, so it's basically, if I have given money and you don't even issue me a CP, I'm giving directly money to a company and company doesn't issue me a CP, who's gonna be making sure that the CP issue ho gaya hai?
Correct.
Well, company, that's the reason, since the amount is not released by the IPA agent or the bank, which in this case, the company will have to issue the CP so that it gets the payment release. So the process is pretty, airtight.
And it is issued in DMAT form only. So if
yes.
I am an investor, I'll get it in my DMAT account.
Yes. 100%.
That's great. Yeah. So I have some security in my name and there's a proof and I'll get the money in my account when it matures.
Yes. Very much. Again, when at time of maturity, I was to come to that. At the time of even maturity now, the transaction happens same. As a company, at the date of maturity, I have to fund the IPA, the bank who's an IPA, and the IPA gives money to the investor to make sure that the settlement has happened.
And this is a bank. It has to be a bank.
IPA has to be a bank. There is nobody else.
Okay, it's not like RTA agent. It could be like Carvi or anything.
No Carvi, no lingering time. It is banks. So you could have, but bank could be anybody. It could be Citibank, ICICI, HDFC. You can choose any scheduled bank.
Yeah, but it's a comforting. And I can see there's
Oh yes,
minimum.
that's what I'm saying. Ki the process is so strictly and defined that there is no scope wherein an investor would have a process confusion or an issuer will have a process confusion.
Okay, and I can see somewhere you mentioned minimum rating A3. So again, you would like to say what is A3? It seems to be some number. What is it?
Yes. So basically, I'll just take you through. So there, in India, there are rating agencies, the credit rating agencies, which are regulated by SEBI. But in case of commercial, the rating of commercial paper is they have to be also approved by RBI to rate any money market instrument. Okay. So for commercial paper, RBI has obviously approved 7 rating agencies. Top 3 are CRISIL, CARE, and ICRA. I think these are the 3 names mostly the people use, but there are 7 of them. So there is a rating scale a rating agency prescribes. And what is a rating? Basically, rating is basically giving a scale or grading in terms of how sound the issuer is and how sound he is to service the liability or to repay the debt which he has taken.
Okay.
Right? So when we say on a long-term basis, the rating scale is AAA, which AAA would be mostly your GSECs or this maybe paper issued by HDFC. It's a AAA rated paper. It's basically the highest level of comfort you can say, or most secure paper is a AAA paper. D is actually default. It's not a rating. It's just somebody is defaulted, is given a D rating. Okay. For example, the ILFS case, it was given a D rating. On the short-term issuances perspective, RBI does define that you can have an A3 rating for short-term. The rating scale for short-term is A1 plus to D again. However, RBI does allow A3, but in the market, because there is nobody who has an A3 rating and issues a commercial paper, there is no market for A3 rating. Most of the 89, I think 95% of the market would be A1 plus, which is the highest rating for short-term papers. So a small market could be there for A1, but there is no market for below A1 in the CP market.
So A1 plus A1 plus is the highest in the category.
Yes. So 95% market is covered by A1 plus. So that is also one of the reasons RBI wants it that way, to be very honest, that, very high rated, corporates only issue CPs because it's a short-term instrument and it's a systemic risk if anybody else can, or any company can issue a CP. So it's a risk in the market, right?
So I think we have already talked about the repayment and interest. It's a like bullet payment and the iPay bank. But from our perspective as an individual investor, okay, everything is good. We invest in it. What is the taxation on this?
So CPs are actually exempt from TDS. So there's no TDS deduction that happen. Since it's a less than 1 year instrument, while the gains come as a capital gains, it's a short-term capital gains, so it will be taxed as per your tax bracket. So assuming you are in a 35% tax rate, I'm assuming so because, so then it will be taxed as a part of your income, your normal income. So if you're in 35%, it will be taxed at 35%. So
it's a short-term capital gain, but not at 15%, but as per my income tax slab.
Yes, there is no short-term capital gain tax benefit currently, no?
Oh, okay. That's not heartening to hear. I would say.
But that's a different way to see it. We'll skip this part, but I think I explained this thing earlier as well, that interest is fixed issuance, and so the way it happens, Vikas, for example, you invest 5 lakh for a 3-month CP, right? Mm-hmm. So on the day of when you are investing in it, you don't have to give 5 lakh. You have to give maybe 4,90,000 something, and after 3 months you get 5 lakh. So this is the way it happens. So when you say I have invested in a 5 lakh CP, the actual cash that you're paying at the day of investment will be lesser than 5 lakh, and and you'll get 5 lakh on maturity. And the differential of that 490 and 5 is basically your interest.
That is why gain, short-term capital gain.
Yes, that's why it's a short-term capital. So CPs are issued at discount.
Mm-hmm. So great. So Shilpa, we both are in finance market, but there's no free lunch. Let's be honest. There has to be some risk. So if say whatever you say about the company, we have heard about ILFS, we have heard about DHFL, we have heard about so many. What happens if the default happens? And you have said it's an unrated paper. So what are the risks actually?
No, so because it's not unrated paper, actually it is
Sorry,
rated
it's
paper, it is
unsecured.
unsecured paper.
Sorry,
So
sorry.
so these are three top risks when you say as an investor, if I do invest in CPs, I would look at it is basically, these are unsecured. So there's vis-a-vis a secured paper or an NCD, it does have a higher risk on investment than other types of debt for sure, because if in case of default, the on the packing order, CPs will come below the secured investment. Second risk that might have in case of investing in CPs is a short-term instrument. So you always have a reinvestment rate. I'll just give you an example. For example, the rates are falling. The current rate is supposed 10%, and the rates on a 3 months, after 3 months, come to 9%. So if you have invested only for 3 months, the next investment, if you want to roll over for 3 months, might be 9% only. So in a falling interest rate scenario, most of the time people would want to do a long-term investment. For example, if आज FD rates 12 हो जाती है, I would recommend everybody to put everything in FDs.
Correct.
For 5 years, lock in for 5 years. So CPs might have an investment risk in case of a falling interest rate scenario, when it comes for maturity and you have to invest it again, you might get a lesser interest. So if you're looking for a falling interest rate, you might want to look at a longer term investments. So that is second risk. Third is basically CPs are not very liquid. Most of the people who buy CPs, there is a secondary market. They are pretty transferable and tradable instrument, but not very liquid market. So most of the people in the CP market buy it for maturity. While it is not a big deal, because finally you're investing only 3 months, 6 months, 1 year paper. So you can take that call and maybe invest accordingly. But yeah, in case you are looking for a trading in CPs, the CPs are not very highly tradable secondary market. So these are, I think, 3 things which an investor, or as an investor, me should take care when we are investing in CPs. And the first, CPs are unsecured and all of this, is where the credit rating comes into the picture, because me might not have a sophistication or wherewithal of doing an analysis of a company's credit rating or a soundness. But the rating agency do an in-depth analysis to see, so which is why the A1 plus market is the most active market for CPs.
Okay, so for unsecured, there is a credit rating that we should look at, and I'm not worried about the falling interest rate. That's a worry of the Madam FM. And the third point, liquidity, and the third point being liquidity. Liquidity, okay, so someone who is willing to spare for 6 months or till maturity, he should put that amount only.
Then it's not a problem at all.
Okay. So now, since you have already mentioned it, that was my next question. What happens in case of default? Oh, say everything happens, there's a black swan event. Do I hope to recover anything?
So do I hope recover anything? It's a question. There's a process involved. So because how it happens is, there are few regulations which are very clear that unless if you do a CP default once, you will not be allowed to tap CP market, and after 6 months that you have paid this. So you have to first pay the obligation which you have defaulted, and after that only you can tap after 6 months you can tap the CP market again. That is one. Then obviously the company.
What do you mean by default? Is it even a 1 day delay that you mean by default? Or
Yeah.
Not giving at all?
For any fixed income instrument, it is even 1 day, one overnight. So if it is due on 15th of September and not paid on 15th September, it is a default. Doesn't matter 15 ko ki jagah 16 chala gaya. Doesn't matter. It is a default. There could be technical issues, but that is a very strong process. Like koi technical issues generally, I have never seen in my 18 years career any technical issue ki wajah se CP delay hua. Aisa nahi hota hai. People, because when you know that it's such a big deal that it will go in a default, what people do is plan ahead. So they will fund the IP right in the morning itself, not wait for the end of the day, right? So nobody takes that risk of a technical system failure and all of that. So when in default, basically it was not paid on the due date. So for example, 15 September is a due date, it is not paid. A company who has defaulted, unless he pays it to the CP holders in full, it cannot come again for new CPs for next 6 months. Even after it pays, it has to wait for 6 months. Obviously, all the defaults are very publicly disseminated. It's not only on their site, it's basically just, I mentioned about the D rating. So whosoever has been your credit rater will make your rating D then and there with no questions asked. So you have defaulted, it's D. So it is very bad for a reputation for any corporate or a bank or an NBFC, to be honest, because entire world will come to know that you have, defaulted on, or you have not paid on a particular day and it could be as small as 1 crore. There is no amount cap as well, because so it's basically a 1 crore, default is a default. There is no definition that, okay, materiality hai, 1 crore mein chal jata hai. It's not like that.
Okay. And if it even defaults, that's the IBC process one has to go through. And
so there is a company law process as well, where you can go to the court, you can go to the NCLT for company law. There is an IBC process as well. Since its CP is unsecured, obviously which is the risk I mentioned, that it on a packing order of, when the company's assets are sold, it is below the secured this thing. The first person to pay off from the proceeds of assets of the company being sold, when it is liquidated, it will be the secured creditors. After that, the CP comes.
Great. I hope I'm not scared our audiences by giving so much risk and everything. Any benefits? Like let's finish our talk with the benefits and why. How should one look at this CP market?
So just to allay your concern now, basically the importance is to do some homework before you invest in CPs, right? Don't invest in any fixed income instrument to understand कि अगर default हो गया तो क्या करना है. Then it's a cheap process, right? That's not the idea behind any investment in a fixed income product. And how CP is better than other instruments, or it's a good investment instrument, is basically, one is definitely better in returns than FDs. I think current FD rates, given whatever it is, still it's downwards of 6%, and when you apply tax on it, kuch nahi aata hai. It's basically 4% post-tax types. CPs have fixed interest rates, so आपको पहले दिन पता है, day one that what are you gonna get. There is no market volatility risk there. For example, if you invest in an equity or anything, that you don't know what exactly gonna make. In CPs, it's a fixed rate instrument. That this is 9% or this is 10%. This is what I'm gonna get. Another thing is, if you have liquidity or cash flow for few months, for example, I have cash flow for 6 months or maybe a year, and the FD is giving me only 3-4%, CP will give you that kicker that, you can look at maybe 7-8-9% returns, which is far better than fixed interest rate. And you might get CPs for 6 months, 1 year, maybe at a 3-4% more than the FD rate. So FD rate would be 3-4%, CP you might get at 7-8-9%.
Great.
So that's the short term. So if you have a short term liquidity, for example, I don't know, you have sold some house or whatever, and you have some time to reinvest it. Mm-hmm. What do you do of that? What is it? If you leave in a current account, savings account, you just get maybe 2%, 3%. That is also taxable. There's a tax that is attached to that. Mm-hmm. So what do? You invest in equities, then there is a risk of market. Niche kam bhi ho sakta hai, zyada bhi ho sakta hai. Correct. So CP gives you that avenue that, okay, I can invest some part of my money in a CP wherein I know that I will earn 8% fixed interest just for 3 months, 6 months, 1 year type. So that's good. And the risk elevate is coming from, basically, it's a highly regulated market, prescribed process. There's a RBI good sense behind it. There are rating agencies who rate, and most of the CP in the market, I think you wouldn't hardly find a CP issuance which is not done by even plus rating. So that's the benefit of investing in CPs.
Great. So I think we can close the presentation, and there are, I think there's I'll open the floor for questions to our audience, and they've been very patient on the Thursday evening, and I'll just see the queue, and there are already 8-9 questions. Yeah. So they're pretty technical questions. So I'll just read out to them. So there's first question, which is like, after NBFC liquidity crisis or LFS issue, was there a lull in the CP system as such? Was there a less of CP issuance?
Not exactly. The CP issuances have reduced for certain, certain credit ratings. So maybe companies who are rated less than maybe A+ or so might have. So basically, when you invest in CPs, I'll explain to you, this is slightly technical. People, when they invest, especially the institutional investors. So the question I'm assuming is not about individual, because individual market is not very big any which ways for CPs. So I'm assuming the question is more about mutual fund and institutional investors. When you invest in CPs, you not only look at the short-term rating, which is A1+ for most of the issuers, you also look at the long-term ratings. post ILFS crisis, ILFS was a AAA rated company. Overnight, it went to a default. So obviously, it's a Six Sigma or a Black Swan event, which happens maybe once in a 10, 15 years type of a thing. So there was a lot of fear around what can happen next. So there was reluctance in investing in CPs of companies which are rated then less than A. That market dried up for a time. It is still not very great. And since most of the investors or the biggest investors in CP market were mutual funds, obviously mutual fund is answerable to their investors and all of that, so that also caused us, some stir in the mutual fund that they reduce investing into certain company CPs. But that was taken care by likes of HDFCs and Bajaj. So from a market perspective, it is as big. It's just that there was a shift. There was more of Bajaj and HDFCs than maybe less rated entities. That's it.
So, in a layman, what I've understood is all the lower rated borrowers were not able to tap CP market for a while, but the credit worthy like A1 plus, like the HDFC, Bajaj Finance,
yes,
they made up for the gap and they increased the issues, made use of the
benefit of CP Vikas is basically it's cheaper than your bank borrowing. It's pretty cheaper.
Yeah.
So nobody would not want to tap CP market. Obviously, it comes with its own restrictions and everything, but it was the market size never went down as such.
So I'll just rush through the questions because they have been increasing. So now we have already answered. Somebody mentioned DHFL also got AAA. How do you defend it? So as we have already mentioned, ma'am has already told that it was a Six Sigma event and it's a Black Swan event. And I would rather say more of it was a corporate governance issue. And whenever you invest, that is why it is said you should look at you should do your own due diligence because there is no free lunch. And that is why you are getting a slightly higher Sigma. So now another question is there from a lady called Sonal. She is asking, if an issuer defaults, where do CP holders stand? Are they paid before subordinate debt holders and or after? So it's a pretty technical one. So you mentioned about secured, unsecured. She's asking before subordinate debt or after subordinate.
I'm surprised with this question that then I assume the people are far more learned than I. They are far more
definitely than me. I'm
more knowledgeable about the market than anything. I think CP stands equivalent to subordinate, and both are unsecured instruments. CP comes just above the equity ones. So in that way, they'll be equally treated, which is what my understanding is.
Okay. So another question is from Mr. Wakade. He's asking on which platform CPs do trade, how the individuals can have the access. I think you can see my logo. That's the answer.
Yeah, basically, so this answer is very clear. So you don't have an exchange kind of a CP thing. So there is no exchange for CPs. There is no clear secondary market जहाँ पे आपको price दिखता रहेगा and you can buy and sell. That's not what the CP does. CP mostly OTC trades होता है. OTC means one-to-one, the over-the-counter trades. And platforms like Jiraaf, that's why platforms like Jiraaf are good for you to see what are the choices you have. And you can also use platform like Jiraaf for secondary market trades. I'm sure they will help you with that.
Not really. As of now, we are not doing the exchange work. So we are just saying when you want to have liquid money, then only you invest it.
Yeah, otherwise, because all the CPs basically are done over the counter. Like two people decides to buy and sell, and the deal could be settled as a जैसे आप एक slip भरते हो, DVP slip भरते हो, delivery versus payment slip. So that is the way demand transfer हो जाता है. Otherwise, for the NBFCs and larger investors, there is an F-track system, but that's only for institutional investors.
So I think we have already answered this question, but for the sake of repetition, risk involved, we have covered it in detail. Does the coupon rate vary? So he's asking a very specific question. If I've invested money today in a CP, say 4,80,000 I've invested today, and I'm supposed to get 5 lakh. Say tomorrow RBI increases the interest rate. What will happen? Do I get 5 lakh or so? It's a
fixed income instrument.
Okay. So there's no effect on the CP.
Yeah. Neither reduction, neither increase.
Neither reduction. Okay. So Deepak is asking another question. What kind of interest rate prevailing today for 3 to 6 CP as on today?
So interest rate will vary depending upon, so there is a short-term rating which is A1 plus, which is given. Now the interest rate will vary from the ones who are rated AAA to the ones who are rated A. It could be as low as 6%. Bajaj may be borrowing at maybe 6%, and there would be maybe some who are rated like A plus or A would be around 10%. So there's the entire gamut of it. You'll have to see what is your investment criteria to decide which way you want to go.
I saw today it goes till 14% also, CP
Yeah.
market. So,
but 14% come hota hai, issuances come hote hain. Reason being, after a certain benchmark, people also start saying it's a risky product.
Correct. So, so another pressure is asking, where do individuals can subscribe to issue or apply to issue of CPs? But so as we already mentioned, this is not a retail product as such, and it's an over-the-counter OTC market which banks mutual fund has been doing, and it is our endeavor as a Jiraaf to bring these products to the individuals. That is why we are holding this session, and you can check our website. We keep on coming with the CPs. So. Again, Sumit, same thing. Sumit, you can check the Jiraaf website. We currently, I think, have one CP live. So another question we have: when a bank is issuing CP, okay, can itself or its subsidiary act as an intermediary for the escrow mechanism?
I didn't get the question. Repeat.
So I think so. Let me tell you, Kripa. A bank cannot issue a CP. First of all, a corporate can issue a CP. A bank issues a certificate of deposit.
Yes.
And escrow mechanism has to be with a bank. So I think we are not able to comprehend the question correctly. So pardon us.
So if I understand you correctly, there has to be a third party IPA agent. So if you're thinking, if I'm issuing CP, can I become a IPA agent? No, there is a third party IPA agent that is required. Banks issue CDs. And the IPA, as per defined by RBI, it has to be a scheduled bank. Scheduled bank, this is a normal bank that we understand.
Okay. So very important question is being asked. Have you seen any default in CP in your life? Can you remember anything?
No.
ILFS, let me prompt it.
ILFS was the one that happened, but it was a bigger one. But other than that, I don't remember anything. So DHFL and ILFS has been, but they were been a dead default.
Not a CP default.
Different default in CP.
Okay, so it's just a short term. You pay as a short term liability, then you default.
I don't think even ILFS or DHFL has a CP default.
Okay.
NCD default था, mutual funds को NCD default किया.
NCD we know the tier
and bank default तो था ही, bank तो था ही default. So the likes of all the PSU banks got stuck because of that. But I don't think there was a CP default. Okay,
so another question is like from Manish. It is like the benefit of investment in CPs as compared to investing in invoice discounting, which are backed by approved invoices and escrow account. So Manish, maybe I'll take this question. Invoice discounting is an unrated product. In the case of CPs, it's a rated product. Invoice discounting, as such, it's a supply chain, and there are other risks involved in invoice discounting. So both are totally different products. Do we have any statistics about the default rates on average? How many companies default in their payments? Samarth, I can answer that question. So if you go to the rating companies, so they do publish the default rates, and it is publicly available. So you can write it to us, so we'll provide it to you. So each agency comes out the matrix, how the AAA to D, how many defaults have happened. So this data is publicly available. It is required by the regulator to be put in. Can you please share some example of defaulted CP issuance? We have already talked. Shilpa cannot place it in memory if she has seen anything. Being unsecured, why the ROI is lower for CDs like 9 when other short-term secured products offered on Jiraaf is higher than 11? Why should I invest in CPs or CDs then? So Harish, it depends on the issuer. So if you see a CP, so it's a highly rated A1 plus, which is the highest credit rating. So you would need to check the underlying credit risk. So it might not be the similar one. And even that is the reason. What Jiraaf has to offer in commercial papers. So as the entire session was for this, if you're looking for security, if you're looking for a delta higher than the fixed return, if you want to block in your money for short tenor, and you want a higher yield which beats the inflation, I think this is the product for you. So
I'll add one thing to what Vikas is saying is now. So the Jiraaf is offering you an avenue wherein you can invest in CPs because as an individual, it is nearly impossible for us to approach a company and ask for a 5 lakh or a 10 lakh or a 20 lakh rupees issuances. That's so much because the amount of process involved in issuance of CP is tedious enough that no company would do a 5 lakh 10 lakh issuances. So I think the platform like Jiraaf is good for people like me who would otherwise will not be able to access that market.
So since you have mentioned me, so there's another question I'll directly to you. As an individual investor, not as a professional,
Sure.
what would you look to before you invest in a CP? What would be your criteria for investment?
So I'll be honest with you because I just registered myself with Jiraaf yesterday.
Okay.
So my criteria will be look at the short term and long term rating both one, and secondly I would not invest I'm more a long term kind of a person, so I would want to lock in rates, but a certain portfolio of mine I do invest in mutual fund, which I believe is a good shift that I can make to commercial papers. So I would look at both the things. I do that research a lot, that I will look at the short term rating and long term rating, as well as the interest rate that he's offering. To be very honest, maybe slightly greedy about the interest rate as well, because it has to make sense. When you're doing a bank FD, it has to be slightly better than a bank FD for me to lock in that money.
Okay. And since you mentioned the mix of long term and short term, so any hacks, long term lead like what? AA minus, A, triple B,
any triple. So that's where I was coming from. I would not recommend anybody for B category, because then you are taking a risk which you might not have assessed properly. When a rating agency give a triple B or a B rating, it's giving a very low soundness rating or grading to a company. So and actually the CP market is between A to triple A. So
okay.
I think anything better than that is anything better than triple B for sure.
Anything better than triple B.
And also it also depends upon the amount of issuances the company does and all of that. So if a company is regular issuer, has a track record, you get to know. For example, how do you know HDFC is good?
Mm-hmm.
It's a track record. It's been issuing CPs for ages. It has been in the market for it's a brand name, it's a reputation. So not everything comes from numbers per se, because you'll also have to see, okay, there is a track record of this company, balance sheet size, this has been in the market, reputation hai company ka, it's a big group. That gives you some soft comfort ki, okay, I can take a call on this company for 6 months, 1 year.
Correct. I agree. So, and I think Deepak is asking one more question. If you apply, are you assured of getting allotted? I think we have already spoken about it, how there's a IPA, insurance payment agent, which is a scheduled bank, and he makes sure that the settlement happens. When you're, so it's over the counter. When Jiraaf did it, we went through the same process. I think it's another very good, interesting question. How much allocation from a portfolio allocation perspective one should put in money market instruments? So how would you recommend in percentage wise, or how one should approach it?
I would not make a specific recommendation. I can tell you mine.
Okay.
So in my portfolio, I don't want to have more than 20 scripts to that sense. And my short-term investment is always at 5% of my total investable surplus. That liquidity I always keep. Could be anything, any requirement that might come up. So I keep my 5% in the short-term instruments.
Great. So I think you have been patient enough to answer all the questions. And
no, pleasure is mine.
I think we got one more question, and I was just about to wrap it up.
No problem.
Another very technical question, so I need a time to absorb it. If a company starts issuing CP at one point of time, does it keep on reissuing, renewing before maturity of existing CP? Is there any alternative to CP from company's perspective? So,
okay. So these are two questions. One is basically every CP has a specific ISIN number. There's a script code for that particular CP, which is given based on the maturity date. So I can have a series of CPs issued if they have same maturity date. For example, today, if I issued a CP which has maturity date of maybe 30th of December, 10 days later, I can have a CP which is a maturity of 30th of December in the same series, but uska maturity kam ho jayega. So the duration of holding would be less by 15 days, right? So yes, a company can issue a series of CPs with same maturity date, but mostly companies do different maturity dates, different CPs as a practice.
And I think he was asking one more question.
Yeah.
Does it keep reissuing, renewing before maturity of existing CP? Can they renew it without paying the investor?
So no. There is no renewal is default. Matlab, without paying an investor, it is default. You can always. So, for example, just to give you more clarity on this, because if I've issued you CP for 3 months, I cannot just renew it automatically.
Okay.
I'll have to pay you first. You may choose to reinvest. That's your choice.
Okay.
I cannot talk and because we are friends dude, I'll not pay you. Let's renew it. It doesn't happen. No friendship, nothing.
Okay. You have to pay me back.
Yes.
Okay, that's good. And
it's default otherwise.
Okay, it's otherwise a default. So I think Aniket is asking, covered bonds, are you planning to launch? I think that's a product which have not been blessed by RBI. And,
RBI it's still in a limbo.
So I think it's a no. It's a very clear no. And we never at Jiraaf brought this product, and we don't plan to bring covered bonds. Aniket, another question is, what is a venture debt? I think I'll request my team to hold a session for venture debt. And today we have expert on commercial paper. So we'll soon come back.
I'll give Aniket one idea. Aniket, instead of covered bond, there is another instrument in the market called pass-through certificate, PTCs, that you do under securitization route. You might want to know more about that. Maybe Jiraaf can do a session on that. But PTC is the market who wants to do it in terms of asset-backed securities.
We are working on it. So again, as you know, the market is like you have to put 50-100 crores of money. Then only.
You're right. There's a lot of it is not very detailed market, but eventually, it came through mutual fund. It eventually, if there is a platform, I'm sure people would want to invest. I would want to invest in a PTC too, very sure.
Yeah. So again, 2 questions arrived at. People seem to be liking you a lot and hearing you. So is there any commission to be paid to either Jiraaf or company? Deepak is asking. So Deepak, we do not charge anything from the investors who are participating on our platform. And obviously we are not, we are in the finance market. We do charge from the company because, and it's not a free lunch. So we also need to pay our bills. So we get the commission for doing this. And Sumit is asking, will short-term capital gain at maturity will be charged at 20%? I think Sumit, you missed it and we'll repeat it. It's a short-term capital gain, but as per the income tax laws, any short-term capital gain which is less than 1 year is taxed as per the investor's income slab. Even if it is a short-term capital gain, and if you are earning 30% or if you are in 45% bracket, this is the tax that you would have to pay. So it's as good as your income slab. So it's no benefit. Technically, it's a short-term capital gain, but from taxation perspective, it's the same. And again, a question Aniket is asking till now, is Jiraaf faced any default of payment in any of their assets? Not at all, and we take pride in it. But I would like to put a disclaimer: when you're doing a credit, there's always a risk of default, and God has been great to us. We have not faced any default till date. Another question has come: is there any restriction on end use of CP proceedings? Can CP be used for repayment of existing debt? I think.
So CPs, there is another RBI regulation which says that when we are issuing CPs, I have to mention it that, as an issuer, I have to mention why I'm issuing this CP. So what is the end use? So most of the time, the end use could be either working capital or stock or general corporate purposes. So yes, CPs and money is fungible. So CPs might be used for, servicing the other debt, but that's most of the time, or only 100% of the time, you have to mention it when you're doing that CP. So there will be an end use, when Edelweiss would have issued your CP, they would have mentioned that the end use is working capital requirement. So it's mentioned. So you'll know that why the company is issuing the CP. Nothing is, hidden.
Okay, we have already taken a lot of your time, Shilpa, and I know you have lovely daughters, and you would like to go back to them.
No. It was at least actually I enjoyed. You have some more questions. It looks like there's been 30 now. I can see 30 now.
Good. So if you are available, I have no issue there.
No, I can answer 1 or 2 more if there is any specific question around CP.
So another very good important question is like, will the paperwork done on my name or on Jiraaf? So you want to explain that how does the So I'll take this one. So what happens, Akash? So we did if a Giraffe is coming with an opportunity, we subscribe. So the CPs get transferred into our demat account. So when it comes into our demat account, so it's in our name. So if you choose to invest through Giraffe, the CPs get transferred to your demat account, and that is the only paperwork. It's like a shares. When you buy a shares, it will come to your demat account. If you buy a bond, it will come into your demat account. So if you're holding in your demat account, it's in your name. So that's a long and short of it. So another request from Deepak to moderator.
Just to explain this more now, whenever the company makes a payment, they take a statement from the demat account holders, the NSDL and CDLs, which is called beneficiary position, bank pos. Similarly, जब आप equity पे dividend आता है, there is a record date होती है. Similarly, when a company makes a payment, we don't know who's the holder currently, right? If somebody would have paid it or not. So we take a bank pos position, it's called a beneficiary position, as to who are the holders, and the payment is made to them.
Okay, and I think Akash and Busy, will the paperwork done on my name? Yes. So when you're investing through Giraffe, we have a securities transfer form where it is mentioned your name, our name, and you have invested so much and we are transferring so much. So it's clearly mentioned. And Deepak seemed to have got bored. He's saying, I don't want anymore to hear about commercial paper. I want to hear more about discounting. So can you have a similar session? I'm sorry, I've taken note of it, Deepak, and we'll get back to you. And I'll request my marketing team to hold a session on this ASAP. Aniket, do Giraffe invest in the asset they bring on their website? Yes, we do underwrite most of our products that we bring. And do we keep on holding the position in that? So answer is no, there is no such mandate. We are just a managed marketplace. We do the credit assessment, what we feel. We do not just list any opportunity. We make sure we do the credit due diligence, and which as per our internal credit criteria and our credit committee, which we feel is credit worthy for individuals to be exposed to, that only we list on our platform. So you won't see each and every deal, and you will see very selective deals, only 13 or 14 counterparties till date on our website. So with this, I think it's 8 o'clock and it's the right time within an hour. So
thank you very much. Thank you, everybody. Thank you, Vikas.
Thanks everyone, and it's been really pleasure to have you all. And the session has been a success because you all asked a question, and we look forward to have many more sessions, and we will take your feedback since you have mentioned. Thanks a lot. Have a good evening and have a good Friday tomorrow.